Hey everyone, it's Investicore here. Welcome back to the channel where we break down the trends shaping your financial future. 2026 is already shaping up to be a game changer for global markets, with political shifts, leadership changes, and tech breakthroughs on the horizon. This year is packed with both uncertainty and opportunity, and it's crucial for investors to stay ahead of the curve. In this video, I'll break down the top 5 factors every investor needs to watch in 2026. Let's jump right in. Let's start with a major theme for 2026, the upcoming change in leadership at the Federal Reserve. This isn't just a routine transition, it's a pivotal moment that could shape the direction of the global economy for years to come. The person who steps into the chair will inherit a complex landscape, with inflationary pressures, shifting growth prospects, and a world still adapting to the aftershocks of recent economic disruptions. The Fed doesn't just set interest rates, they set the tone for the entire global financial system. Every decision, every statement, and every policy tweak sends ripples through Wall Street, Main Street, and markets around the world. Investors, businesses, and even governments look to the Fed for signals about what's next. A new chair could mean a shift in how aggressively the Fed fights inflation or supports growth, impacting everything from stocks to real estate. Will the new leader prioritize taming inflation, even if it means higher borrowing costs? Or will they focus on supporting job growth and economic expansion, risking higher prices in the process? These choices will affect mortgage rates, business loans, and the value of your investments. The Fed's communication style is just as important. Markets crave predictability, and a new approach could spark volatility. A chair who's clear and transparent can calm markets, while mixed messages or sudden policy shifts can trigger sharp reactions. The way the new chair explains decisions, handles press conferences, and interacts with the public will be closely watched. Inflation remains a concern, and the new leadership will need to balance growth with price stability. The challenge is to keep inflation in check without stalling the recovery or causing unnecessary pain for consumers and businesses. This balancing act is never easy, and the stakes are especially high right now. The Fed's stance on market support during crises could also change, affecting sectors from banks to tech. Will the new chair be quick to intervene in times of stress, or will they take a more hands-off approach? The answer could determine how resilient the financial system is in the face of future shocks, and which industries benefit most from Fed policy. Globally, the Fed's decisions ripple out. Rate hikes can strengthen the dollar and pressure emerging markets, while a dovish Fed can boost risk appetite worldwide. International investors and policymakers are watching closely, knowing that changes in U.S. monetary policy can affect everything from currency values to capital flows and economic growth in developing countries. Regulatory policy is another lever. A stricter chair could tighten credit and impact lending. The new leader's approach to financial regulation will influence how easily businesses and consumers can access loans and how much risk banks are allowed to take. This could have far-reaching effects on economic growth and financial stability. Ultimately, market confidence hinges on the new chair's credibility and clarity. If markets trust the Fed's leadership, volatility tends to stay in check. But if doubts arise about the chair's experience, judgment, or ability to communicate, uncertainty can quickly take hold, leading to sharp swings in asset prices and investor sentiment. Watch the succession process closely. Who's in the running, their track record, and how markets react to their early statements. The selection process itself can move markets, as investors try to anticipate what kind of policies the next chair will favor. Will they be a consensus builder, or someone with bold new ideas? Every clue matters. This transition will set the tone for the rest of the year. The new chair's first moves and initial speeches will be dissected for hints about the future path of interest rates, inflation, and financial regulation. It's a moment that will shape expectations and strategies across the investment world. For investors, paying attention to these details could make all the difference. Understanding the new chair's philosophy, priorities, and communication style can help you anticipate market moves and adjust your portfolio accordingly. In times of transition, information is power. The Fed's next move isn't just a headline, it's a market mover. Stay tuned, because the decisions made in the coming months will echo across the global economy, shaping opportunities and risks for everyone. Next up, the 2026 U.S. elections, a pivotal event that's already casting a long shadow over financial markets and investor sentiment. This election is shaping up to be a major source of market uncertainty, with investors bracing for heightened volatility and unpredictable swings in asset prices. What makes this cycle especially unique is the deep polarization across the electorate and the sheer number of high-stakes issues on the table, from economic recovery and inflation to climate policy, healthcare reform, and global security. The direction of policy could swing dramatically depending on the outcome, impacting everything from corporate taxes and regulatory frameworks to government spending priorities and international relations. Historically, volatility tends to spike in the months leading up to and immediately following elections, as markets react quickly to surprises in polling data, debates, or unexpected results on election night. Regulatory risk is especially high this cycle. Sectors like technology, healthcare, and energy could see sweeping changes, with new rules, incentives, or restrictions depending on which party takes control. Trade policy is another major wildcard. With global supply chains still recovering from recent disruptions, any shift in tariffs, trade agreements, or diplomatic relations could ripple through markets worldwide. Political uncertainty can trigger capital flight, sharp currency swings, and a pullback in both business investment and consumer spending, as companies and households wait for clarity. Remember, markets are forward-looking. Much of the anticipated impact may be priced in well before the final results are announced, as investors try to get ahead of the news. In this environment, it's crucial to stay flexible and avoid making big portfolio moves based solely on political predictions. Diversification and a long-term perspective remain your best defenses. Fiscal policy decisions, whether it's new stimulus, tax hikes, or spending cuts, will play a key role in determining which sectors emerge as winners or losers in the post-election landscape. So, keep your eyes on the underlying policy shifts, not just the headlines or the noise of the campaign trail. The real impact often comes from the details buried in new legislation and regulatory changes. The smart money is already watching, analyzing every development and preparing for multiple scenarios. Staying informed and adaptable will be key as the election approaches. Now, let's talk Europe, where political uncertainty is at a peak. Key elections in 2026 could reshape the euro, trade policy, and economic growth. Europe's patchwork of countries means a single election, like in Germany or France, can shift the balance continent-wide. The rise of populist parties threatens EU integration and could trigger volatility in the euro and trade agreements. Policy debates over fiscal integration and regulatory standards are heating up, impacting bond yields and banking stability. Trade policy shifts could affect everything from auto exports to energy imports. Economic growth remains sluggish, and political instability makes reform harder. Currency swings are likely. Uncertainty can amplify returns or losses for international investors. Regulatory fragmentation could create headaches for companies and investors alike. Europe is at a crossroads, and the decisions made this year will shape its economic future. Stay informed and ready to adapt. Shifting to Asia, China's economic path is a global market driver in 2026. Growth is slowing, with demographic shifts and regulatory crackdowns adding pressure. The government's reforms aim to boost productivity, but challenges remain. Regulatory risk is high. Tech, education, and real estate have all faced crackdowns, creating uncertainty. Trade tensions with the US and a push for self-sufficiency in key sectors like semiconductors and green tech are reshaping the landscape. Real estate instability could ripple through the banking system and slow growth further. Still, China's investments in renewables, EVs, and advanced manufacturing offer opportunities for savvy investors. Currency risk is real. The yuan's moves can impact global commodity prices and companies with China exposure. China's trajectory also affects emerging markets, influencing demand for raw materials and capital flows. Policy decisions in Beijing will be critical for anyone with international exposure. Understanding both the risks and opportunities is essential. Keep China on your radar. Finally, let's talk artificial intelligence, a force transforming every sector of the global economy. AI is no longer a futuristic concept. It's a present-day reality, woven into the fabric of our daily lives and business operations. From the way we communicate to how we diagnose diseases, AI's influence is everywhere, and its momentum is only accelerating. In 2026, AI is a fundamental driver of change, powering breakthroughs in healthcare, finance, and manufacturing. Hospitals are using AI to analyze patient data and predict illnesses before symptoms appear. Financial institutions rely on AI algorithms to detect fraud and optimize trading strategies in real time. On factory floors, intelligent robots are streamlining production, reducing errors, and boosting efficiency to levels never seen before. Companies leveraging AI for productivity and innovation are seeing outsized gains. Early adopters are not just improving their bottom lines, they're redefining what's possible in their industries. Startups and established firms alike are racing to integrate AI into their products and services, hoping to capture new markets and outpace competitors. But rapid innovation means today's leaders can quickly fall behind. Investors must stay nimble. The pace of change is relentless, and companies that fail to adapt risk being left behind. For investors, this means constantly reassessing portfolios and staying alert to emerging trends and disruptive newcomers. AI is reshaping jobs, automating roles, and creating new ones, which could spark social and political backlash. While some workers are displaced by automation, others find new opportunities in fields that didn't exist a decade ago. This transition is creating tension as communities grapple with the pace of change and the need for reskilling and support. Data privacy and security are major concerns. Companies ignoring these risks face fines and reputational damage. As AI systems handle more sensitive information, the stakes for protecting data have never been higher. High-profile breaches and misuse of personal data can erode public trust and invite regulatory crackdowns. The gap between AI winners and losers is widening, with increased market concentration and regulatory scrutiny. Tech giants with vast resources are pulling ahead, while smaller players struggle to keep up. Regulators are stepping in, investigating antitrust issues and seeking to ensure fair competition in this rapidly evolving landscape. Investors can target leading AI firms or beneficiaries in chips, cloud, and cybersecurity, but diversification is key. The AI ecosystem is broad, spanning hardware, software, and services. Spreading investments across these areas can help manage risk and capture growth wherever it emerges. Ethical concerns around bias and accountability are rising. Companies addressing these may gain a reputational edge. As AI systems make more decisions, questions about fairness, transparency, and responsibility become critical. Firms that lead on ethics can build trust with customers, regulators, and investors alike. Globally, AI leadership is a geopolitical race, with the US, China, and Europe all vying for dominance. National strategies, investments in research, and international partnerships are shaping the future of AI, with far-reaching implications for economic and political power. The outcome will shape markets and the world order. The nations and companies that lead in AI will set the standards, reap the rewards, and influence the direction of innovation for years to come. Keep AI at the top of your watch list. The opportunities are vast, but so are the risks. Staying informed and agile will be essential for anyone hoping to thrive in this new era. Adaptability will turn disruption into opportunity. Those who embrace change, invest in learning, and act decisively will be best positioned to succeed as AI continues to reshape our world. Let's recap the 5 key themes for your 2026 watch list. Fed succession, US political risk, European uncertainty, China's economic path, and the rise of AI. Each could reshape markets. Which factor do you think will have the biggest impact? Drop your thoughts in the comments below. If you found this video helpful, hit like, subscribe, and turn on notifications for more market insights. Thanks for watching. Staying informed is your best investment. See you in the next video.